All right, so I want to do a quick another, trade breakdown. Last time I did a trade breakdown and shared it on YouTube, um, I actually called one of a really big move on GJ. I think it was actually right around here. Yeah, it was around here where I was essentially saying that it looked like we were starting to exhaust, coming back into these highs over here around 157. And don't be surprised if the market starts to retrace and come back down to retest these general areas over here looking left. And I released a video, I believe, on January 8th. You can go back and look at my previous videos. I released it on January 8th and somewhere around here. And then shortly after that, as I was saying, look for those shorts on GJ. The pound might experience some weakness. And in fact, we went on a 400 pip dip. Let's see if we can I'm just going to measure it from the high to the low. Of course, most people aren't going to get the high. Most people aren't going to get the exact low. I mean, I guess it really just depends on your trading system. But anyways, this entire range here was marked around 470, around like, let's just say 3.3%, right? So we dropped about 3% in this entire zone here from the high to the low, right? And as I said before, I called this way before this is any of these candles were printed on the chart. All this stuff was not here. I think we were like right around here. I can't see the date for some reason. I got this thing in front of me. Actually, let me move it to the side. Maybe I'll be able to see. Yeah, okay. So January 8th is, so it was, again, it was over the weekend. That's what it was. It was over the weekend. So January 7th, I was calling it right around here. And I was at, look for those shorts. But anyways, that's in the past. So I'm going to try to kind of, give out some of what I'm seeing right now on GJ and some things you guys should probably, just be looking out for. So let's just get into that. First and foremost, we can clearly see that the market has had, as I said before, a very good past few days on the pound market. It does start GJ market. It's starting to see on the lower time frames that we're starting to exhaust a little bit. But it really just depends as to like how we're going to move moving forward. I won't go all the way to the monthly time frame because we can really just focus on what's going on now. And based on current price action, I could zoom out a little bit. Well, based on current price action, we can see that there was several exhaustion areas up here on the pound market around like 157 area. We were just exhausting. We're creating some type of resistance around like 157, 100. But we recently just broke that. So this is what I would consider all the breakout prices. We do have another key area around 163. But pay attention to the time, right? We all know that the market is very time efficient. So there are a couple of things that I'm thinking about personally that I'm like, okay, might come into play with this upcoming week, not only being the last week of the quarter, but it's also going to be it's also NFP week. So it's a special week that we have ahead of us. You have Q1 coming to a close. You have NFP open. You have a monthly candle closure, and the market is broken out. We've broken a major zone, actually a zone that we haven't really come to since 2018. We have not traded this high on GJ since this time. This is like the highest price that we've tested. Now we've traded back this high, back in 2016. But we're talking about this is 2022. We're talking about 4 years worth of resistance prices that we have not closed above, at least on the weekly time frame. So this is a major breakout price. So there is potential on the lower time frame that eventually a pullback is going to happen. As we know, there's a very high chance that after any breakout price, market does tend to come back and kind of correct that move a little bit and give us a rich retest before it continues in the direction, if that's the bias, if the fundamentals align, right? So on a daily time frame, like I was saying, look left. This was that January area where the market was experiencing a lot of those dips, right? Every time we came into this area, we're seeing the market come down, another drop in this area. So a lot of people were essentially signifying this area as a potential supply, and any prices down here in the low as potential demand. And in fact, we obviously did have demand in this area. And obviously this area was acting as a general area of supply, right? And we can see that strong impulsive leg that we had from this demand zone right around here. So that was a really good bounce that we had on GJ. But since we've essentially broken above in this area, you have to understand that all these left side areas of resistance, these circles are not perfect. Let me try to go back a little bit, clean it up. Let's clean it up just a little bit. Still not perfect, but you get the point, right? These general areas of resistance are the most recent areas that we've broken above. This fresh supply zone has essentially been broken, closed above on that this day alone. We haven't had a strong daily candle as strong as this in a very long time on GJ. If you compare this candlestick compared to the past 2 years worth of daily candlesticks, you will see that this is one of the strongest closings we had on the daily time frame. But that's not too important. What we want to do is we kind of want to go down to the lower levels and kind of try and see if we are essentially going to get that general break and retest. Where there's previous resistance, they tend to come back and serve as new support. So a return back into here would not be surprising. But also watch out, because the market is still, super bullish. Don't be quick to try to look for the sells, because the market could continue, especially with the structure we have in the lower time frame. We could continue, seeking higher levels into 163 before that reversal comes. But this long move is not going to be sustained for. It's a daily time frame. It's not a monthly time frame. Daily time frame gives you pullbacks. Monthly time frames, you got to wait a long time. And those trends can last a very long time. But on the daily time frame, we're bound to come back eventually, especially after breaking, historical resistance prices. We're bound to come back and, give ourselves a fresh retest of this previous zone, and then possibly continue to 163 or go to 163 first and come back. And I'm not necessarily, bearish on GJ. But I also understand that, being that these are such historical prices since the past 4 years, I am a little bit vigilant as to trying to swing this market long term, knowing that there are better potential prices in the near future. And you also have to think of it that way as well. So let's go down from here. I think I did it right. Okay, perfect. So I do have these, these general levels over here already marked up. Just taking a look at it a little bit more, resistance, 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 we've broken above it. So as I said, look for those potential retracements in this upcoming week with everything that we have going on. Now, with this, I also want to kind of like study the trend, put this out there for everyone. So take a look at how this bullish trend was formed, and let's just talk about it. So of course, we've had that. This was that first, general area. We did break structure over here. We formed our last, I guess, significant lower high as far as this structure is concerned, right? And then we showed our sign of weakness here. And look how the market was essentially, creating very, shallow pullbacks. But then we were having strong, impulsive, bullish moves, right? But take a look at how this last move, it wasn't as well sustained as the previous moves, right? This one wasn't that big of a trend, but this one was a long sustained bullish trend. That was a long sustained bullish trend. That was a pretty, good trend as well, but this is not part of the bullish market structure. This is still part of that bearish market structure. It was at this point where we broke that structure that we started to say, okay, we form a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We at the higher low. And in fact, on Friday, we were buying GJ back into 161. Now that was a successful trade on Friday, but with things coming up now in the lower time frame, you do have to essentially, ask yourself, what is the range that we're trading in? And if we kind of zoom in a little bit, you can see generally right here, right? That higher high, higher low, higher high, higher low. Well, this is the range that we're in. We're in between this previous higher high and this higher low over here. And then we created another range from this higher low to this higher high, right? And then we have this higher high to this higher low. So the current market right now is inside of this range. Sorry, I think I said this range before, but I meant this range here, right? We're inside of that range. Let me just, right here, right? That's where we currently are. We're inside of this previous range on a lower time frame. So as everyone's watching this now, they know that this is the high of the range, this is the low of the range, and this is where the market closed. So as you're watching that, you just have to be very vigilant and essentially understanding where you are on this time frame, so that way you don't get confused as to where we're potentially going in the future, right? If this is the higher low, we can potentially break above in this new week and continue moving higher, right? You don't want to start selling GJ because we're still forming bullish market structure, right? This is a higher high, that's a higher low. We can break this previous higher high and trade higher. But when you go to the 1 hour time frame, for example, things, this is another thing you kind of have to take into consideration. Now, this is, very far-fetched, but I was taking a look at this at the time of recording. It's like Saturday. I was taking a look at this and I was just thinking to myself that, what if we did, if market structure from this point, especially fundamentally, I have fundamental reasons for believing in this, but, take some time and look at the fundamentals as well. But what if we started doing something like this at this price point? In fact, let me pull out the tool that I sat here, my favorites just for this reporting. So what if we did ourselves a good little head and shoulders right here, right? Now, it's not going to be the cleanest head and shoulders, and it's way too early to call it. But what if we did find ourselves back down here where the market previously created its previous leg over here? What if we come back and correct this market back into this area, and then we continue the bullish trend from this point, right? Now, we're not necessarily going to know when it has a higher probability of playing out until we start breaking these structure points here. So for example, as I said, we're trading inside of this range here from this high to this higher low. We're trading inside of that range. Now, if we come over here, let's say during market open, Monday, Tuesday, we start, this starts seeming like a lower high, and we break this structure here. That breaking structure will also not necessarily be like, the signal to say to start selling. That's not going to be the signal, but it is going to, that's not going to be your telltale sign to enter sales, but it could be your signal that the market structure is starting to essentially weaken, the bullish market structure, at least from a 60-minute time frame. And 60 minutes is valid enough for you to essentially, make a long-term decision. 4 hour is much better. Of course, the higher the time frame, the better your decisions long-term will be. But so something like this, for example, if we come up here, lower high, we break the structure point, and then, you can kind of create your diagonal neckline. I don't really use head and shoulders much, but I know what most of the retail community is going to be doing. So you got to also think about what their markups are looking like, because any pattern, whether it's a double bottom, double top, triple top, Gartley, whatever all these random patterns are, they're all formed based off of trader psychology. So it's not happening randomly. It's all pure price action stuff and people reacting to the market. So if you do see a head and shoulders, pay attention to it because it's based off of traders' decisions. So that's a little bit of a tangent to just say that if you see it, don't just disregard it as a retail pattern, because it's a real thing. It's a real phenomenon happening in the market, and it's something that you should pay close attention to. So if we do break the structure again, create your diagonal neckline. And then, of course, what you would want is maybe like a break and retest where where this previous higher low was formed. You want to see a break and retest from here. And then, of course, you want to try to hold your positions back into the previous area of supply, or sorry, in this case, demand, because at that point, we could possibly Let me start over. I didn't mean to drop my thing there. So something like this, retest. You want to try to hold it, or maybe like hold your trades into this area and then of course come back. Now, I'm not telling you to trade, it's not financial advice or anything like that, but that's essentially how I would play it. But again, there's a lot of precaution because of the time of the year that we're in right now. You know, we're coming to the close of the quarter, and we are also coming to NFP week. So anything can happen in this week. As we know, there's a lot of uncertainty that happens right before major news such as NFP, ADP, and all the other news that we have lined up for this week ahead. So that's it for this video. You know, just giving out another little thing. I don't do these much, but go ahead and leave a like, a comment, or anything down below. Let me know if you guys like these things. I'll try to do more of them in the future. And yeah, happy trading. Good luck to everyone.